Welcome to Canadian Dividend Stock Channel. Today I'm going to talk about S&P 500 ETFs, Canadian Dividend Stocks, which are very important for 2022. Because of the market volatility this year, the stocks are not performing really great at the very fast half of the year. Now, as the time is going on, the stocks market is getting on its pace. So let's get started and see what is in our list today. So at first, you can buy all these stocks from Wealth Simple Trade. You can use the promo code given in the descriptions, and you can also buy those stocks from Quest Trade as well. So let's get started. So the very first stocks in our list today is Vanguard S&P 500 ETFs, like the BFB. It's one of the most popular ETFs for Canadian when they look to invest in US assets. So this ETF tracks the S&P 500 index or any success or therefore it invests into the US companies. One key point to the one of the key point to keep in mind while investing into BFP is that it is not tied to Canadian dollar. It is unhedged. So why it is unhedged is that that means that you are betting on a stronger US market and a stronger US dollar. It's aimed to. So the top six companies that BFP invest are Apple, Microsoft, Amazon, Facebook, Alphabet, Tesla. Alphabet means Google's. The trailing return for these stocks, like for these stocks, are 28.53%, and for the last 5 year are about 16.49%. The management expense ratio for BFP is one of the lowest, around at 0.08%. The dividend yield is 1.24%, which is good compared to the price of the stocks. And the management expense ratio is 0.08 with a 0.80 per $1,000 invested. So this is quite low fees, and it is very popular in Canadian market as well. So let's see the price improvement of these stocks. So if we go and see that over the years, the stock price is in a very positive notes, and it's performing really well. As you can see from the graph that it's going really upward as day passes, and although it has seen some dip in 2020, but after that it's continually going upward, and it's from the last 5 years it's going really great. Going to the next one in our list is Vanguard S&P 500 Index ETFs, which is Canada Hedge, like CAD-HEDGED ETFs. The ticker symbol for these stocks is BSP, and the dividend yield of this stock is 1.16%, with an asset under management is 1.2 billions. The management ratio for this stock is 0.09%. So they actually increased it was around 0.08 annually. So the Vanguard, this is the like a second Vanguard ETF on this list, and ETF is like Canada Hedge, as you already mentioned that earlier. So what is this is like this stock is do is that performance on a broad US equity index that measure the investment return of a large capitalized US stocks. Unlike the previous ETF BFP, this ETF is hedged to the Canadian dollar. Currently, this Vanguard ETF seeks to track the S&P 500 Canada hedge or any successor there too. The way this ETF get exposure to the S&P 500 is holding underlying US listed ETF BOO. You guys may know this BOO is really popular in USA. This is exactly why when you look at the BSP on something like Yahoo Finance, it has only a single holding BOO. So before I start sounding like a more like broken record in terms of holding and allocations, BO has much the same as any other ETFs on this list. The ETFs also uses derivatives instrument to seek the hedge the US dollar exposure to the securities, including the S&P 500 back to the Canadian dollars. An investment of 10,000 in May 2016 would have returned 19,795 on March 31st, 2021. Management fee for this is, as I mentioned earlier, it was 0.08% annually, but now it is they increased it to 0.09%. But this is what it is compared to the stability of these stocks. So if you see the improvement or performance of these stocks for the last 5 years, it is also like in very much a positive trend, and it is maintaining this trend throughout the years. Going to the next one in our list is BlackRock share called S&P 500 ETFs. So this is one of the ETFs that is really nice and quite similar with the BSP, with an yield of 1.9% and asset management of 7.066 billion. So the management investment structure is a bit expensive than the BSP or BFB compared to this, but BlackRock has a reputation to maintain their qualities over the times. This stocks is like this is one of the core stocks that is kind of a hedge and maintain the quality over the years. If we look at the other side of this stock is that this is currently holding like the similar stocks as BOO and is comparatively same with the other one. But the price is for this stock is comparatively lower than the other PSP or BFP. So this is a great choice if you think that you want to buy more stocks with amount of money. But the asset under management is really great compared to the other one. So if you go to the next graph and see the 5-year performance of these stocks, we can see that this has a really great period apart from the March 2020. Um, Only then it see a deep. We would call this as a great deep. But apart from this, this performed really well from over the years. Going to the next one is BMO S&P 500 index ETFs, which is a Canada hedge like Canadian hedge ETFs. So these ETFs ticker symbol is ZSP with an annual dividend yield of 1.18%. And under assessment and asset under management is 10.88 billions with a management expense ratio of 0.09%. This is one of the great ETFs considering the low volatility and performance over the years. So this ZSP invest in and hold the constituent securities of the S&P 500 index in the same proportion as they reflected in the index. So it is no surprise to again see the likes of Apple, Microsoft, Amazon, Facebook, Alphabet, or and Tesla in the top 100, top 10 holding of these ETFs. In terms of sector exposure, the largest allocation is toward the technology companies at 23.5%, followed by financial services at 14.2%. As with the other ETFs on the list, its holding consists of the largest and most liquid US stocks. They also benefit from currency appreciation down south as this ETF is unhedged. Um, This ETF has returned 28.3% in the trailing 12-month period and 16.57% in the last 5 years. Constituent securities must pass minimum float adjustment and liquidity screen to qualify and maintain membership in the index. Index weight are reviewed quarterly. 10,000 invested in these ETFs for 2016 would have been like 21.4 to 482 per $2 today. So this is a great expensive, and the comparatively the expense ratio is also low. Comparatively the performance over the years. So this is also a great choice for investment. If we again go and see the graphs for the last 5-year performance, it has a great going over the years as 64.07% from 30. It's gaining its space over the years and is performing really great from the last year too. If you can see that from September 2020 to uh, 20 to 21, it has great pace of going upward from time to time. So this is a great stock to choose. Going to the next one is Horizon S&P 500 Index ETFs. So this is an outperformer on the ETF scale when it comes to Canadian ETFs, S&P 500 ETFs. The Horizon S&P 500 Index ETF has both a Canadian dollar version, which is HSXS, and a US version, which has a U with the HSXS. Which one you will choose is ultimately depend on whether you see the currency holding on into the futures. The performance of these stocks directly correspond to the performance in the US terms, like US dollars terms, and the S&P 500 index net of the expenses. The performance of this HXS will generally, but not directly, correspond to the performance in Canadian dollar terms of the like S&P 500 index net of the like expenses also. The difference in performance of Canadian units in different of Canadian dollar in terms solely result of the difference in like the currency rate used by the ETFs. So this ETF has a return of 28.37% in a year and 16.46% in 5 years. Since its inception, like in 2010, 10,000 invested in it would have been given you a return of 50,563 on March 31st, 2021, which is really, 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 really great. The S&P 500 index has the highest fees on the list. However, they are really still cheap, coming to 0.1%, um, like $1 per $1,000 invested in there. Going to the CDL of last 5 year performance, as you can see that since the introduction it was $25, but now it is 58.19%. Again, the stocks has always been an upward, apart from the March 2020. This performance is really significant, and it's encouraging to invest in this stock. Finally, thank you so much for watching the video, and please don't forget to subscribe. And if you want to buy them, don't forget to use the promo code in the description, and have a wonderful day. Thank you.